Something really interesting is happening in Chennai's real estate market. You see, while most other big cities in India are kind of tapping the brakes, Chennai seems to have found the accelerator. So, what's going on here? In this briefing, we're going to dig right into the data from Realty Pulse India, unpack the strategic pivot, and try to map out exactly where the city is headed.
Okay, so here's our game plan. First, we'll look at the big picture, why Chennai is such a fascinating anomaly. Then we'll get into the massive infrastructure projects that are literally changing the city's landscape. From there, we'll zoom right into specific neighborhoods, and finally, we'll tie it all together with an investor's playbook. Let's get into it. All right, let's start with the core thesis. What is it that makes Chennai such a standout, such an anomaly in India's property market today? Well, this chart tells a pretty wild story. You can see here that while the national market actually saw a slowdown, a 14% deceleration, Chennai completely bucked that trend. It didn't just stay flat, it posted a 15% increase in home sales, hitting nearly 22,200 units. Now, this isn't just a lucky break. It's what we call a structural anomaly, and it's pointing to a much deeper economic shift. So what's holding all this up? How is this possible? In a word, safety, structural safety. Take a look at that dial on the left. The market is only holding about 1.4 years worth of inventory. That is an incredibly healthy number. It basically means there's almost zero risk of a housing glut. And at the same time, prices are growing at a really steady, sustainable 6% a year, while still being more affordable than other top cities.
And here it is. This is the engine that's driving everything. We call it the GCC Pivot. In 2025 alone, a staggering 7 million square feet of office space was snapped up. And here's the kicker. More than half of that went to global capability centers. These aren't just call centers. These are high-value R&D and analytics hubs. This is the #1 sign of what's to come for the residential market. You get high-paying jobs, you get powerful, sustained demand for quality homes. Simple as that.
Okay, so that explains what's happening. But the really big question is, why now? What makes this opportunity so specific to 2026? Well, the answer lies in one of the biggest infrastructure upgrades in the city's entire modern history.
Just try to get your head around the scale of this. This is Metro Phase II. We're talking about a 116-kilometer network. The price tag? Over 61,000 crore rupees. This is so much more than a few new train lines. This project is completely redrawing the map of Chennai, connecting the tech corridors and industrial zones to the downtown core. All of those areas that used to be the outskirts, they're about to become transit-oriented gold mines. And if you want to see the impact in real numbers, check this out. This is what we call the station premium. Properties that are just within a 1-kilometer radius of these new stations on corridors 3 and 4 have seen their values shoot up by 30%. 30%! That absolutely crushes the citywide average of about 6 to 8%. This is infrastructure converting directly into asset value right before our eyes. Now let's shift our focus to the west for a moment and what we're calling the Aerotropolis effect. The main catalyst here is the massive 5,000-acre Parandur Greenfield Airport. But the airport itself isn't even the whole story. The really crucial part is how it's connected. It's getting its own metro extension, and it's going to connect directly with the new Bangalore-Chennai Expressway. The result? Land values across that entire western corridor are going to get a complete reset, creating this incredible hotspot for big planned townships.
So, with these huge macro forces at play, the obvious question becomes, where specifically does the money go? So, let's transition from the big picture and dive deep into the micro markets to find these high-velocity investment pockets.
This matrix right here is our central playbook. It lays out the 3 key zones side by side. So, in the first column, you've got OMR. That's your premium play. Highest prices, but also the highest appreciation, driven by those GCCs. In the middle, you've got West Chennai, near Poonamallee. It's the most affordable entry point with huge growth potential thanks to the new airport. And then you've got the third column, Southwest Chennai, around Porur, a really interesting balanced profile that we need to look at.
Yeah, let's zoom in on the Southwest, because what's happening in Porur is what we call the DLF convergence. Think about it. You've got the new metro line, the massive DLFIT park, and 2 top-tier hospitals all coming together in one spot. This creates this rock-solid, almost unbreakable demand from senior IT and healthcare professionals, and you can see developers like TVS are already tapping directly into it. Now, let's swing over to the OMR corridor. The story here is totally different. It's a flight to uber luxury. The demand isn't for small, compact apartments anymore. Oh no. People want huge, master-planned communities with all the bells and whistles. You see it with projects like Casa Grande Hala Chennai, a 30-acre development, and Apaswamy Greensville, which is pure luxury, with prices starting well over 1 crore. And finally, back out in the west, you have the Mount Poonamallee corridor. This is what we're calling the mass township play. This is where the highest volume of mid-segment homes are being sold, and it's all driven by that new metro terminal and the expressway connection. The poster child for this trend is Prestige Bella Vista. It's not just a building, it's a 25-acre microcity with over 2,600 apartments, engineered perfectly for this wave of demand. Okay, we've looked at the big picture, we've seen the game-changing infrastructure, and we've drilled down into the neighborhood hotspots. So now, let's bring it all home. This is the investor's playbook. This is where we turn all of this analysis into a clear, actionable verdict. This matrix really lays out the top-tier options for you. Over in the OMR cluster, you could go for the massive scale of Casa Grande Hala Chennai or the premium brand power of Apaswamy Greensville. If you're looking at Poror, Prestige Bella Vista gives you that huge township feel with shops and everything built right in. Each one has its own unique selling point, from the amenity-heavy projects by TVS to the ready-to-go infrastructure around Poror. But of course, no investment comes without risk, and you have to be smart. This is our risk radar, and it flags the things you absolutely have to watch out for. Number 1, wetland encroachment. You do not want to get caught up in a project near the Palakroni marshland. Number 2, land titles. The term to know is Naltham Poram Bok. You have to ensure your title is crystal clear. And finally, yeah, traffic is still a headache, but as we've said, that new metro is the best possible hedge against that specific risk. So after weighing all the opportunities and all the risks, here is our final verdict. Pator is an aggressive buy. Why? It's all about that convergence. There is nowhere else in the city where you get the metro, major IT hubs, and top-tier healthcare intersecting so perfectly. It hits that absolute sweet spot in terms of pricing for the exact wave of middle and upper management that's coming in. This makes it the ultimate high-confidence play. The demand is already there, the infrastructure is physically being built, and the path for appreciation is clear. The question for investors really isn't if, it's how to get in.